Hi, I'm Paul Herman of Herman and Company Certified Public Accountants located in White Plains, New York. Today's topic is about tax planning for college gifts to minors. This is an important topic for anyone who's got children This is an important topic for anyone with young children who will be attending college in the years to come. One thing you should consider is a 529 plan. This is a college savings plan allowed by the IRS. The advantage of contributing to a 529 plan is that any amounts contributed to the plan will grow tax-free, and as long as the money is eventually taken out and used for college expenses, it will never be taxed. So you want to think about a 529 plan and putting the money in as soon as possible to give it as much time as possible to grow tax-free. How much can be contributed to a 529 plan? You can contribute up to $13,000 a year into a plan for each of your children. You and your spouse can double that contribution or can put in $26,000 a year into a plan. If you have more than one child, you can contribute that maximum amount, $13,000 or $26,000 each year, to a plan for each of your children. The tax law also provides you with the ability to make up to 5 years of contributions at one time. So in the first year, you could contribute $65,000 into a plan for your child, and between you and your spouse, you could contribute $130,000 into a plan. Now, what you have to keep in mind if you decide to do this is, one, you are using up the contributions for the next 4 years. So you will not be able to contribute $13,000 for each of the next 4 years. You'll need to let the IRS know that you've front-loaded your contributions to the 529 plan, and you do this by filing a gift tax return. There'll be no tax that's due with this return, but you need to file a gift tax return if you make advance contributions. Another smart way to plan for college tuition is to have perhaps the child's grandparents contribute to a 529 plan. The benefit here is that money is being contributed to the plan and that the grandparents' estate is being diminished by the amount of the contribution, and therefore any potential estate taxes will be reduced as well. Here's another idea to utilize the tax laws to your advantage in paying your child's college tuition. If you're going to sell appreciated securities in order to generate the funds to pay that tuition, if you do that, you'll have a gain, and that gain will be subject to capital gains tax. Why not gift those securities to your child and have your child sell the securities? Because your child is likely in a very low tax bracket, he or she, in all likelihood, will not pay any capital gains tax on the proceeds of those securities. Therefore, the full amount of the sale proceeds will be available to use to pay for college tuition. Finally, you should be aware that there are some college tuition credits available to reduce your taxes on your personal income tax return. One allows you to deduct up to $2,000 a year, and it applies only to undergraduate tuition. There is another credit of up to $2,500 a year that you should look into if the tuition being paid is for graduate school, because it applies to graduate school tuition as well. Those are a few ideas to utilize the tax laws to your advantage to help pay for college tuition. I'm Paul Herman of Herman and Company Certified Public Accountants located in White Plains, New York.